Hey, strategic wealth preservation investors. It's Chris Vermeulen from thetechnicaltraders.com. It's the second quarter update on the gold markets and stock market and get a feel for where things are at. And of course, let's dive right into the charts here. We'll take a look at gold first. And if we take a look, we're going to look at the big picture, the monthly chart of gold. Now, in the grand scheme of things, I believe the stock market is getting very close to a major correction. Although it is still in a very strong uptrend and going higher, we might start to see the equities market top out come May and then go into quite a bit of noise. We are going into the presidential election, and there's a presidential cycle that typically favors stocks, but we'll see how things unfold going forward. We're definitely seeing technology start to fall to the background a little bit, start to falter. SP 500 is rallying, and we are seeing other things start to rally like gold, silver, miners, platinum, things like that starting to move higher, which is a sign that we're very close to, I think, an economic kind of recession and a major stock market top. So let's take a look at the gold chart here. This is the monthly chart of gold. And more or less, we'll look at the monthly chart first and then zoom in on the shorter time frame. But gold has had a very nice move here. It's been consolidating for quite a while in this kind of multi-year pattern. It started and broke out to a new super cycle back in 2019, right after it had topped out in 2011, 2012, built a new base, and then was able to break out of that. Now, the scenario that I believe we're in right now is we're starting to see gold, silver, run higher. And that we saw this happen back over here after we had a kind of a multi-year consolidation in gold. And then we started to see gold, silver, and miner rally up into the stock market top just before the recession hit, before stocks really fell off a cliff and sold off. And I believe that's what we're starting to see now. Gold is having this run. And back over here, we saw gold break into a new super cycle back in 2022, 2023, depending on how we look at it. And so we're in this consolidation phase, just like we saw back over here before the stock market puts in a top. Gold, silver, miners rally, and we're in this nice rally mode. And I do believe, though, when the stock market does have some type of correction or a financial reset that could be fairly severe, I think the equities market could potentially fall 40, 50 or so percent. I do think wherever gold is, it could be actually still quite a bit higher from here. It could be potentially $2,600, $2,700 an ounce, will eventually get hit and sell off with the stock market, just like it did in 2008. Gold pulled back about 32% with the stock market just because of forced liquidation, margin calls. More or less, when people are scared, they sell everything. And sometimes even if they don't want to sell gold or sell investments, they're still forced to. And that is why we see gold and pretty much all assets go down during a financial reset, a recession, and a bear market in equities. So I am very bullish on gold. I do think it's going to hold its ground. I think it's going to have a little bit of a wild ride over the next several months as all this kind of plays out over the next year or so. But in the grand scheme of things, I think we are in a super cycle, and it's just a matter of time for the stock market and the recession to kind of cleanse itself and create one of these pullbacks and consolidations. And then I think we take off into something very big, a multi-year, mega year run in gold and silver. So let's take a quick look over at silver. Now, gold has been trading up at new highs. Actually, we'll go to the daily chart of gold so you can see the short-term viewpoint here of where the market is running. Now, I use Fibonacci extension. I've got a very simple way to identify where some of these targets are. Now, I take a low, I take a high, and I take this low, and I can carry that forward. And the way that I use Fibonacci extension is more or less you have the initial momentum move up. You've got a quick pullback. And if it starts to rally, then we usually see a run up to the 618 level. And if the market hits this level and pulls back and takes a bit of a pause here for a couple bars, now this is the daily chart, it only has to pause for a couple of days, then generally we can go up and we'll hit that 100% measured move, which is 2350 for gold. And that really could play out over the next literally 1 to 3 weeks fairly easily. So there's some pretty good potential there in the short term. Now let's go take a look over at silver, and then let's look at the, we'll look at silver on the monthly chart. Now silver is dramatically underperforming gold. Now gold is equivalent to trading like up here at new all-time highs. Silver is dramatically off those highs, down roughly about 50%. So silver is definitely not outperforming. Silver, you could argue here, is kind of broken out of this this base down here. It's created this launch pad. It's trying to figure out, when is it going to start the next rally to the upside? It has come to life. We are seeing some good volume. Money flows into silver and into gold miners, which is a good confirming indicator. And silver's got potential to run back up, I think, to this 30, maybe potentially even like $35 over the next, this is the monthly chart, over the next couple of months. It could have an explosive move. So there's some different levels here, 28, roughly 30. Those are kind of the more realistic targets. And of course, this would be very similar to what we saw with gold in terms of silver could run up here over the next few months. And then if the stock market starts to correct, silver could very easily fall back down into this range and consolidate while the stock market falls off a cliff and resets. And then we go off into, I think, a massive, major super cycle, which, there'd be some interesting levels through here that when it breaks through this level, it could really take off and skyrocket back up to 50 or 82 or a bunch of different upside targets for gold and silver. If we go take a look over at platinum real quick, platinum hasn't been performing all that well, but it looks like it's building a base. It's really been flatlining for about since 2016, so a very long time in this big chop. It has a similar pattern where it's had a big rally up. It's just faded down. There's really no interest in precious metals right now. The only people who are interested in it are people like us who are in the space, who are natural kind of gold bugs. But the general public, no one is interested in gold. And that's why it's out of favor. Nobody's interested in gold miners. There's just no interest in this space. But that is a very bullish sign. That means people aren't in it. The general masses, when the masses get in it, that's when the price really gets driven up and can rocket higher for years. So the market is still working itself out. People are still all about AI and more or less cryptos and stuff. There will be a time when they fall out of favor and people move back in physical assets like gold and silver. And the more that they're out of favor right now, the more upside potential there is later. So there's nothing wrong with no one interested in gold other than, if you're watching this, than us, because that means there's a lot of upside potential for everyone to start adding 1, 3, 5% of their portfolio, adding gold to it down the road. And that will send gold and metals through the roof. So platinum is kind of bouncing bottom, kind of drifting sideways. If we take a look at palladium, it has completely fallen out of favor. It's coming back down into a pretty critical support level from back in the early 2011 all the way to about 2018. So it's fallen out of favor and not looking the greatest. But when you look at the precious metal space kind of as a basket, there's an ETF called GLTR. And I'm just pulling this up simply. It's a mix between gold, silver, platinum, and palladium. And if you look at this space, I'm a technical trader. And if we look at this space, we can just kind of draw a line across here. You can look at this as a giant cup and a handle pattern. Now, a cup and handle patterns are known as one of the strongest patterns. If it is a true cup and handle pattern, you can take the depth of the cup and you can stack it on top of itself multiple times. So it gives you an idea. You can see a cup and handle pattern potentially unfold 300-500%. Very, very big upside potential. And so I see this as the precious metals space. If you get a basket of gold, silver, platinum, palladium, collect some of those, they are building a launch pad. And this is if you look at this is like a 12-year cycle. 12-year pattern, which means it's got a lot of upside potential to run for many years when it kicks into high gear. So that's all really exciting stuff from that regard. Now, if we go and we take a look at, let's quickly take a look down here at, this what different assets do at different times. Now, this blue cycle here is the stock market cycle. The yellow cycle in the background is the economy, the economic cycle. Now, the stock market and commodities, all these things generally move first, and then the economy clicks in later because the economy supposedly requires 2 bad quarterly GDP numbers and other stuff like that to say we're in a recession. So it's always at least 6 months delayed, usually from the stock market. Now, typically when the stock market is near a top, precious metals do very well, which they are. They're coming to life. Energy stocks do well. Oil's been moving higher. Energy stocks are breaking out to some new highs. Industrial capital goods tend to do well. And so that is like industrial equipment. If we go and take a look at XLI, if we look at XLI, this is industrial sector, it has been ripping to the upside. And that's because most people don't understand the economic cycle. A lot of people, business owners, don't understand the business cycles and stock market cycles and emotional cycles that all the investors go through. And so they've just had the COVID bubble, and people are expanding. They're buying new factories, machines, equipment, upgrading all of their stuff. And so the industrial space is doing really well because people think that this is going to continue and that they're going to keep growing. Little do they know they're spending all their capital, investing in equipment, upgrading, and then sales are going to dry up. Everybody closes their wallets, businesses tighten, services, everything just locks up, and everybody suffers who have just finished upgrading. So this is one of those things we got to keep our eye on. People are feeling real good in upgrading, thinking business is good. When everybody feels really good, generally there's only one way to go after that, and that it comes to an end and people are wondering what the heck they did wrong and how did they do everything at such the wrong time. So that's kind of these things that I just touched on. All of these things with energy, precious metals, they are definitely a warning sign that we are getting very close to a major market top in a recession. And energy stocks have really popped, and they're just on the verge of breaking out and starting another big run higher. The daily chart definitely shows this better when we look. You can see how energy stocks have just been on a tear and starting to break out of some key levels here. So that is a sign. Other than that, let's just take a look at the long-term picture here of the SP 500. Now, I look at the stock markets. I look at it like the ocean. When the tide's going up, it lifts all boats. So we have a rising tide, a stage 2, a bull market. And then we also have when tide's going down, pretty much all boats go down with the tide, and we've got a falling market, a bearish phase. Now we are back in a bullish phase for the stock market. This is the SP 500, a weekly chart. And so what we just need to realize is when the stock market goes down, when it's in a bearish phase, almost everything else goes down with it. So right now we're in a bullish phase. And there's ways we can take advantage of it with shorter term trading strategies, get the most out of the markets, avoid the drawdowns. And that's kind of where we are right now. We're just riding this market up. Gold is moving higher. I'm a big fan of physical metals. And I think there's going to be a lot to be said to holding physical metals because when the feeding frenzy really does start in the precious metal space, could be a year from now, a couple years from now, could be sooner than that. You're going to want physical metals. It could be almost impossible to get it, and that could create pricing to go absolutely parabolic and shoot off. So I believe getting metals while you can is very important, and not ever thinking of selling them until way down the road when if there's ludicrous amounts of profits and maybe it looks like metals are ready for a big retreat. But they are a very good long-term defensive play, an insurance plan against currencies and other assets falling in certain regards. Anyways, that's about it at this point. I think the key here is just to focus on the big picture of precious metals. They are in a sweet spot right now. They have room to run. Gold is a pretty slow mover percentage-wise. It only looks like it's got 4 or 5% more to the upside before it hits its next target. But there is potential for gold to run a little bit higher. Let's look at a bigger picture here real quick, just so you can see the overall upside potential that could run before the stock market tops out. So I'm going to use Fibonacci extension here. And you will see that this huge pattern, grab here, this huge rally up, this big pullback, and it's starting to extend. It happens to be a 618 level of a multi-year pattern. Now, it also happened to be the 618 level of this little pattern that we measured right here, from here to here to here. So this is definitely a very important level it's at. Maybe we're going to have a pause here for a couple days or a couple bars. This is a month, so it could pause for a month or two based on this huge chart pattern. And then it's showing it to head up to around $2,600, $2,700. So we might see gold continue to extend. And when it gets up to this level, that could be when the stock market is topping or starting to break down already. Because keep in mind, gold can keep moving up, even if the stock market is actually starting to fall during that time frame. Gold, this is the time where gold can shine and buck the trend. But when the stock market really starts to break down through some serious support levels and goes into a big collapse, that's when gold will eventually get pulled back down. And maybe it only gets pulled back down to where it is right now. So I think gold really, is at a good point here where there is some downside risk to it. But overall, based on everything that's unfolding here, it's a pretty good price level to get into these there. Gold's just starting to break out, has potential to the upside from where it is right now of about another 18%. So that is not bad if it can run 18% over the next few months while the stock market potentially stalls and tops out. Anyways, that's it for now. If you got any questions, you can always come visit me at my website at thetechnicaltraders.com, and I'm happy to help answer any questions you guys have from technical regard in terms of precious metals. Talk to you soon. Bye-bye.